If you have $1,000 sitting in a regular checking account, here's what your bank paid you last year. 4 cents. Here's what you could have gotten. Same $1,000, same year, same zero risk, just sitting in a different account. $45 for doing literally nothing different. I'm 19 years old. I had money sitting in a checking account for like 2 years before I figured this out. Today, I'm going to show you exactly how the bank is screwing you, what a high-yield savings account is, and how to set one up before the end of this video. Here's the thing. Your bank is not your friend. Your bank is a business. When you deposit $1,000, they don't put it into a vault and wait for you to come back to it. They lend it out to others. Mortgages at 7%, car loans at 9%, credit cards at 24%. They make $70 off your $1,000. Then they give you a penny back. That's the entire business model. And before you think, my bank's not that bad, here's the actual numbers. Chase savings, 0.01%. National average across all banks, 0.42%. A top high-yield savings account right now, 4.5%. That's 450 times more. A high-yield savings account, or HYSA, you'll hear that word a lot, is just a regular savings account that pays you a real interest rate. The catch? They're almost always online only. No branches, no ATMs you'll ever walk into, no employees and matching polos. That means way less overhead, and they pass those savings to you. The big ones right now are Marcus, Ally, SoFi, Wealthfront, Capital One 360, and Discover. All of them pay between 4 and 5%. None of them charge you $1. None of them have minimums you can't hit. Now you might be thinking, wait, online bank, no branches, sounds kind of sketchy. Is my money actually safe? Yes. Every single bank I just named is FDIC insured up to $250,000. That means if the bank somehow disappeared tomorrow, the US government covers your money. Same insurance Chase has. Same insurance your local credit union has. There's literally no extra risk. Here's where it gets real. Say you save $200 a month, part-time job money. After 4 years in a regular checking account, you'd have $9,604. In an HYSA at 4.5%, same money, same effort, $10,553. That's an extra $949 for clicking like 5 buttons today. And that's just on $200 a month. Bump it up to $500 a month and run it for 10 years, which if you're starting now, gets you to 29, and the difference is over $13,000 for doing nothing. Okay, so how do you actually do this? First, pick a bank. Here are my 4 picks right now. Marcus by Goldman Sachs is the boring, reliable one. Ally has the best app and the easiest transfers. SoFi has the highest rate, but only if you set up direct deposit. Wealthfront actually pays the most, but technically isn't a savings account. It's a brokerage cash account. Still FDIC insured though. Honestly, you can't go wrong with any of them. Whichever you pick, just make sure it checks these 4 boxes. APY of at least 4%, FDIC insured, no minimum balance, no monthly fees. That's it. The sign up is the same on every single one. Name, social, address, link your existing checking account, transfer some money in. The whole thing takes like 10 minutes. Then set up an automatic transfer, even $50 a month, so you never have to think about it again. So yeah, same money, same lifestyle, way more of it. Your bank isn't going to tell you about any of this because it's literally not in their interest. That's why this channel exists. If this saved you future money, press the subscribe button. Next episode, I'm breaking down Roth IRAs, what they are, why nobody told you about them, and why every year you don't have one is costing you real money. See you there.